Hello everyone. This is the pre-market report video for today, 7th November 2023 in the Indian stock market in terms of Nifty and Bank Nifty. In the last pre-market video, we discussed in detail about the last week's very weak jobs data and how market cherished for that. Now, last night, if required, please pause and have a look. Again, in response to that, Fed interest rate monitoring tool predicted 85% probability that Federal Reserve is done with its interest rate hike cycle, meaning no more increase in interest rate hereafter. In addition, 80% probability that Fed will start to cut the interest rate from next year June itself. I mean, we all know one of the huge worry at present is about the warning that Fed will keep the higher interest rate for the longer period of time. But now, this monitoring tool predicted that no longer rate hike and 80% chance Fed will start to reduce the interest rate as early as next June. And over 65% chance that they will reduce from next year May month itself. This is an unbelievable market positive probability, and because of that all three US major index opened positive and closed positive. However, during the intermediate time there was a huge volatility mainly due to two reasons. One, 10-year Treasury bond yield after reaching below 4.5% on last Friday, last night again it increased and moved above 4.65%. Second, in S&P 500, 4,360 to 4,400 was the resistance that prevented the recovery rally on October 16th. Then it dropped near 6%. And in the last week alone until last night, it recovered all those lost near 6%. So basically it's a double top resistance which in turn created some profit booking. However, what's important is last night it closed positive for the 6th straight session. Other than that, there was no big macro release nor even the big company's earnings release. Only later this week on both Wednesday and Thursday, Fed Chairman speech is scheduled. In that, Thursday includes a question and answer session. So again, all the investors will be looking for his comment about very new weak jobs data. Anyway, in the end, Dow Jones up by 0.1%, S&P 500 up by 0.18% and Nasdaq increased 0.3%. In case of US VIX, it's roughly around the same place as last Friday. Regarding oil, during the weekend, Russia and Saudi Arabia released the statement that they were very committed about oil production cut and for sure they will extend the production cut till the end of this year. This statement made the oil to increase over 2% on Monday morning time. However, Reuters said that their analysts predicted not so good Chinese trade data which is scheduled to release today, which in turn wiped all the oil's morning gain. Thus, at the time of this video, WTI crude oil trading at $81 per barrel and Brent crude traded around $85 per barrel. In case of Indian ADR, it was very much mixed. Infosys increased over 1%, whereas Wipro closed negative 0.5%. In banking side, ICICI Bank closed absolute flat, but HDFC Bank closed over 1% negative. Here, even if you see the historical arbitrage, the same last night status is holding. Anyway, I tried to find the reason why HDFC Bank was over 1% negative, but there was none that was concrete enough. So maybe it's just now almost all the Indian banks posting mixed results. So might be market is taking away the premium it gave for Indian market for its growth and asset quality. Even yesterday in Indian market, 12 out of 13 major sectors closed positive. Only PSU Bank closed over 1% negative. And also, as I said, so far banks' earnings were not as great as last quarter. About GIFT Nifty, it increased over 19,530, but early morning today it closed at 19,476 with 70 points premium. For now, it's indicating flat to negative. So that's all about the global market. Now let's discuss about the Indian market. First, about trade volume. In yesterday's pre-market video, I discussed about it as a potential looming concern. Now, not even within one day, yesterday as per CCIL data, non-deliverable forwards NDF market trade volume dropped 33% in September on month-on-month basis. Just for everyone's benefit, in India, always direct trading of INR is restricted. So through NDF market, Indian banks are allowed to speculate on or hedge against potential INR currency movement without actually dealing in the INR itself. The settlements in an NDF market are usually in US dollars, and the market operates outside of India in financial centers such as Singapore, London, and New York, where the local Indian regulations do not apply to INR trading. So now, in order to arrest the rupee fall, informally RBI restricted the Indian banks from building fresh arbitrage positions, as this will dilute the impact of RBI's intervention in the over-the-counter OTC market. Just think about it. RBI is selling dollar to stop the rupee fall, and in this situation Indian banks got lot of rupees. So without any issue, simply Indian banks can increase the mark to market profit with the help of remittance money from abroad betting against RBI. But now banks are complaining that RBI is not allowing that. Now this will increase the Indian banks mark to market loss. Maybe that might be the reason why HDFC Bank ADR was negative. Either way, Indian banks want RBI not to intervene in rupee and bond market, so they can make money from increasing trade volume and through arbitrage as well. Anyway, moving on. Second, again FIA was net sellers. The net sold for 550 crore rupees and DI net bought for 600 crore rupees. Just for info, last week on October 27th, FII's long-short ratio was around 12.3%. On last Friday, it improved to 17.68%. So basically, FII trimmed their short position in index future. However, on the negative side, they still holding enormous short positions. Third, yesterday during our market hours, India's Vehicle Dealers Association FADA said that October retail vehicle sales dropped 7.7% compared to last year. Here, this is clearly negative news, but however, market failed to react to it. But just be cautious since this is very important negative news. Then, as per stock open interest, Bata, Bank of Baroda, Pidilite Industries, Aditya Birla Capital and State Bank of India got an increase in open interest with a negative close, indicates the short build-up. On the other hand, it's JK Cement, Ramco Cement, ONGC, Bharat Forge and Deepak Nitrite got an increase in open interest with a positive price close, indicating long build-up. As a summary, US market closed positive. However, GIFT Nifty and Indian ADRs indicating mixed and flat to negative opening. Regarding Reliance GDR, it closed positive in line with the Indian market. No fresh positive close. So far now, market indicating a consolidation today. Let's see. Then about the things to look out. Today, Power Grid, Shree Cement, Apollo Tyres, Crisil and Jyoti Lab are some of the major Indian companies' earnings results are scheduled released today. In terms of macro, early morning before our market opening, Japanese household spending and Chinese trade data is due. Then during our market hours, Germany's industrial production growth is due at around 12:30 p.m. And in the night, US trade data, Fed Vice Chairman speech, Fed FOMC members Waller and Williams speech and EIA short-term energy outlook are some of the important macros we need to keep an eye out today. Coming to technical, for the third consecutive day, yesterday Nifty opened more than 100 points gap up and it remained higher throughout the day, and in the late hour trade it closed above 100-day exponential moving average near an intraday high. Thus, on the daily chart it formed a medium bullish candlestick pattern with minor upper and lower shadows. Because it moved decisively above 100-day exponential moving average, now all the eyes are on the 50-day exponential moving average 19,450. So, if Nifty closed decisively above 19,450 and holds, then it could potentially pave the way for a Nifty rally towards 19,550 to 19,600 level. Again, 19,450 is the same level around the high of the big red candle formed on October 23rd and 21-day moving average. On the lower end, the support is situated at 19,300 points. Then, similar to Nifty, Bank Nifty also traded higher for the entire day as it opened with 300 points up and traded within around 200 points range before closing at 43,619, up 301 points. Thus, on the daily chart, Bank Nifty forms a doji candlestick for the fourth straight session, but it made a higher high and higher low formation, and also it closed above the 21-day exponential moving average 43,500. So basically, Bank Nifty has broken out of a falling channel indicating a trend reversal from down to up, with daily momentum indicator has a positive crossover. Thus, we can expect both price and momentum indicators likely to continue the positive momentum till 44,000 on the upside, with support at 200-day exponential moving average 43,240. Then on the options data front, the maximum call option open interest is at 19,500, followed by 19,600 and then 19,400 strike, with new maximum meaningful call writing at 19,600 strike, followed by 19,500 strike. While the maximum put option open interest was visible at 19,300 strike, followed by 90,400 and 90,200 strike, with new maximum put writing at 19,300 and 90,400 strike. Thus, from this options data, it also suggested that 19,500 to 19,600 can be the next crucial resistance area, with support at 19,300. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.